Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings investments in your retirement here on the show. Our show is all about building up wealth, understanding the world today, navigating through your retirement and protecting your retirement in these very uncertain times. Our motto and our philosophy is to save aggressively and invest conservatively. That's the key to building up wealth over the long term. Save aggressively and invest conservatively. Now, typically, you want to start that out with your 401k plan. Put away as much money as you can. You know, our goal for everybody is, and we started this show back in, 2006. We'll be coming up on the 20th year of the show. But the savings rate was close to, it was a little under 2%, right around there, which was, in the past, it had been 5-6%, and we had a savings crisis, and we looked at the best way to save money and build up wealth, and it was obviously it's the 401k program, and so what we've done is we talk about that on the show all the time. Your goal should be 10% in your company plan, minimum 10%, and plus you get a match as well. The number is actually 13%. It's called income-based savings. If you put away your money in those programs and then you just leave them alone, it grows tax-free. And the best part about it, in addition to growing tax-free, if you put $10,000 in and your tax rate is 20%, your top marginal rate, you're going to get back $2,000 when you do your taxes. So the government subsidizes part of the money going in. And so now it grows tax-free, but when you take it out when you're 60s, 70s, and 80s and 90s, you're going to pay taxes, but theoretically at a lower tax rate. And you've gained from that tax-free growth that Warren Buffett tried so hard to get, buying insurance companies and swapping stocks. You're selling out one stock to trade for another stock, let them in a takeover, and he kept the stock because he never wanted to pay taxes. The government gives you that for free. Take advantage of it, save aggressively, and invest conservatively. Well, as usual, it's always something on the show. We got a lot to talk about today. We've got markets are up. Silver, the big news really is that silver has broken out above basically a 50-year range. It never topped $50. And back in, I want to say 1980, I think it was 48, 30, 49, 36, 34. And then in 2011, it was about 49.84. And today it's trading up around 58.30. It's over $58. And so this is a breakout. Silver's been one of the best performers, if not the top performer of the year, and gold has as well. They both moved up dramatically. If you just look at the SLV is up 100% year to date, and the let me see what we have here. Let me just check it out. I don't have the gold right. I think gold's up about 60%, 59%. And what's really fascinating to me is CNBC spent their entire year talking about AI constantly, and if you look at the performance of the gold and silver stocks, I'm looking at a lot of the big tech companies, and with the exception of Palantir, which was up 140%, none of them, including NVIDIA, was even close to that. At all. I mean, the best one was Google, up 69%, and of the Mag 7 group, and Palantir's not even in the Mag 7. And if you look at the precious metal stocks, I'm just looking at my screen. I've got 1, 2, 3, 4, five, five or six of them up over 100% and substantially over, and that's really where your best performance has been this year, and we've been talking about this for a number of years, saying this was coming. We on the show we've been pointing out the debt keeps rising. There seems to be no way to control the debt, and I think Donald Trump is finally developing a plan. The European countries are in worse shape than we are. If you just look at it, their economies are collapsing. The industrial base in Germany in manufacturing is falling apart. I mean, one thing you need to manufacture is cheap energy, and they had cheap energy from Russia. They cut that off. And then just to make sure that everybody got the message, they closed down their nuclear power plants as well. So they have some of the highest energy costs in the world. Factories are shutting down. Europe is basically shutting down. France, the UK, they're arresting people, for getting on Twitter or something. And they had one guy that actually went to Florida and got to shoot a gun and posted it on Twitter, and they arrested him when he came back. And the EU is if you honestly look at the EU, you really almost have to classify it with places like Cuba and Venezuela. If you look at China, China's done a good job. You could say, hey, that system works. You could say Russia's system sort of works. You can say clearly the United States is the best system out there. The EU system is an abject failure, and so people are turning to gold. Europe's ultimately going to probably have currency controls put in place. There's problems there. The interest rates are going up in Japan. Japan has a debt to equity ratio of debt to GDP ratio of about 230%, and 35 somewhere in there. And this compares to the U.S. We're about I don't want to even use a number, but I want to say maybe 115 or something, and interest rates are rising there. Debt has skyrocketed around the world, and the question is, how are you going to pay back the debt? There's massive amounts of derivatives out there, on everything from actually gold and silver to oil to the dollar to bonds to stocks, and the numbers are hundreds and hundreds of trillions of dollars. And so the question is when, so how do you want to actually, in a world where the government is printing money, the people are turning away from the U.S. dollar and Treasury notes because we were the gold standard. Everybody kept their money. But back in 2022, Russia invaded the Ukraine, and we confiscated the Russians' money that was at the Federal Reserve, at our central bank, and they had treasuries there, and they had treasuries in Europe, and they froze it. They didn't confiscate it; they froze it. Well, as soon as that happened, every country in the world had to develop fallback plans to protect their foreign exchange reserves, and they couldn't all be in dollars because their stuff could be frozen too, and that basically triggered the ascension of gold, which is more than doubled. It's about doubled since then. And you're seeing a complete redo of the financial system. And as this redo is happening, you have so many countries around the world just recklessly spending money. Precious metals are going up. Real estate's going up. Stocks, because people want to own assets. The nice thing about actual physical gold and silver is if you own the physical gold or silver, there's no hold on it. There's no one on the other side of the trade. There's not another guarantee, and that's become a problem out there because people aren't sure who has what debt and where. It's the same thing if you own a piece of property. If you own it free and clear, if you just have debt, that you know what you own. And that's an issue, and I think that's benefited the stock market to some extent as well. And this is why gold and silver has gone up. I mean, we've seen some very substantial. I mean, this is the biggest bull market since 1980. This whole thing looks very similar to the 1970s in a way. Instead of oil, remember it was oil. It was the shock of the Arabs coming in and and cutting off our flow from the Middle East, and oil shot up. Instead of oil, it's gold. And they built the system on the petrodollar, and instead we're going to build a gold system where other countries around the world are using gold, and going to, particularly China is done a lot of work to have the Shanghai Gold Exchange and in place where you can buy and sell gold and buy renminbis and actually get renminbis from China, and then you can just convert them to gold if you want, and so it makes the renminbi a very strong currency. And for everything I've read, China has a lot more gold than they're letting on, and so this is why you've seen this. This is just the culmination of lots of things happening in the world. Now, the good news is President Trump has a plan to get out of this, but it's basically fourfold. You'd even say five, but it's reduced government spending through the Doge Commission. They got about $200 billion of stuff there. They need more from Congress, but they're not going to get it because Congress is unable to cut funding anywhere. Then they've got they put the tariffs in place, which is going to generate $250 billion, and then they come up that due to the tariffs, manufacturing and negotiations of the tariff, a lot of manufacturing is back, and that's going to grow the economy, so we would grow our way out of it. And then he wants to push down interest rates, short-term interest rates at the Federal Reserve. And so this is a great plan. The question is, what happens if the Supreme Court says that the tariffs are illegal? And the Democrats are desperate to roll back the tariffs and anything. I mean, if Donald Trump creates peace in the world, that's their ultimate nightmare, because they have to somehow trigger a war because they hate Donald Trump so much. But the problem is, if they got to give back, the U.S. has to give back $250 billion. That means we get $250 billion bigger deficits. At that point in time, look out. I think you can see a real crisis in the United States. And this is coming up with the Supreme Court ruling. Hopefully, they'll come up with some type of plan in place. But he's got a good plan. Things are happening. Things are changing. But understand, it's a very, very volatile world out there, and we have to build confidence back up in the United States of America that we can run a country without recklessly spending money. One of the more shocking things is the sheer amount of corruption all over the country, as we talked about. Most shocking things I've ever read was that 7 of the top wealthiest counties in the United States are all around Washington, D.C. These people are getting filthy rich up there. Look at the corruption up in Minneapolis. They didn't want to do anything about it. They said it's $1 billion. People in the know said it's at least twice that, of just people claiming they were giving out free lunches or doing this or doing that. They weren't doing anything. They were just having a little Potemkin village and then claiming they were doing it and collecting hundreds of millions of dollars from the federal government and the state government. And that money actually typically came from the federal government. All across the country, there's corruption going on. And the United States is increasingly looking like, the close analogy is ancient Rome, where it just starts to disintegrate, and we've got to get control of the situation, and we have to bring it back to what it was. And I think President Trump has a plan for that, and I think we can get there, but it's going to be a rough and rocky road, and the fact that gold is going up like this isn't a real positive for anybody in the world. Gold's worried about something. Clearly, it's the spending. It's a possibility of war. It's just this war situation won't go away. We should have had peace with Russia, but for some reason we can't get it. And I don't know what it is, but the Europe. The big talk is Russia can't conquer Europe anyway. Well, they could easily conquer Europe. Let me tell you, all they have to do is they attack Europe and they bring in Chinese soldiers, and Europe is toast. And the interesting thing is, China and Russia are moving in lockstep in here, and Trump is trying to kind of break that relationship. But every time he talks friendly to Russia, the Democrats go wild. And the country is really threatened now. We've got to grow through this and protect the country and get what's right for the long-term interest and quit this political infighting in this, and really some of these people have just, I mean, the Trump derangement syndrome, TDS, is a real legitimate thing with a lot of people in the United States, to the point they'd rather see the country destroyed rather than Donald Trump look good in any way. And that's a concern, particularly if you're a long-term investor in the U.S. and your retirement plans depend on that. And we're going to talk more about how to protect yourself right after this quick break right here on the Max Out Savings Show.
Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement. This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. And we're just talking about a lot of the big issues happening. Why gold and why? We've been talking about this for years about gold, silver. We said, look, this is the one. We said silver's going to run, and that's pretty much the way it's played out. I don't think it's played out completely. A couple thoughts on that. You have to. We've been very busy. We've had to rebalance our accounts to some extent because some of these positions became so large, and we have to manage through that. And it's been quite a bit of work, but it's a good situation. But I think up here you do have to take some profits on stuff on physical, unless you're just massive, way overweighted somehow. I would continue to hold that. I don't care what. I think the physical you have to hold long term. I think you want to continue to do that. That's almost like an insurance policy. I don't think this is played out at all. But some of these stocks, just looking at them on our systems here on the Bloomberg, it's they've had huge runs, and so you do want to pull some off the table. Now, having said that, the idea of holding stuff, and it is. You want to hold things long term to make a lot of money. And if you look around, if you let things run, you can. It's easy to sell something up 20% and book a big gain and everybody's happy. But if you let things run, you can get that that 50%, that 100%, 200%, 300%, or multiple hundreds of percent moves, and so you want to kind of manage through that as well. And it's tougher for advisors or money managers in any case because they have they've got to kind of manage the risk as well. But you do want to have them long term. But having said that, it's had a big run. If you want to pull a little off the table in here, just see it wouldn't be a bad idea. As again, with the precious, with the actual physical, we would not be sellers in here. There's a bigger spread between the two. You also pay a higher tax rate, and I don't think this is all played out. I think we're going to have to somehow get to the point where some of these countries fail, where so there's sovereign risk. Where the country gets in trouble, likely out of Europe. I'm looking at Japan. Japan, the 10-year continues to go up. It's hit 1.5% or something like that today. What is it? 1.9747. It started the year at 1.12, and you're like, well, Ted, that's a good deal. Our rates are higher, but the problem is they have so much debt over there, and there's something called the carry trade, which a lot of people were borrowing huge amounts of Japanese yen at 1% or so, and then investing in the stock market, investing in crypto, investing into all types of things around the world. And that it's called the carry trade is kind of blowing up now. So again, there's just a lot of things out there in the world that still it's still very uncertain. If you look at the markets, everybody thinks the market's going up into year end. I mean, it's an absolute consensus trade that makes us a little bit nervous. But we've got a Fed meeting coming up next week, and we'll see what they say. This is the important thing here. I want you to understand is, I have it written down here somewhere. We first started out. Actually, let me go over here. Pull up one of my graphs. Yeah, when the Fed first started cutting rates, it was the Fed funds was close to 5%, something like that. Can I move this thing over? There it is. 4.9%. The Fed funds. Remember, Fed funds is short-term money put on at the Fed, so it's your short-term benchmark. The 30-year bond was trading at about 190, 393, somewhere like that. And since then, the Fed has cut 150 basis points or so, and the rate is the 10-year rate is now 4.8%. So they've cut rates 150 basis points, and the 30-year has gone from below 4 all the way up to 4.8%. Long-term rates are rising as the Federal Reserve is cutting rates. And I think that could be the thing that kind of triggers some of this stuff, is everybody's all excited because the Fed's cutting rates, and the markets always go up when Fed cuts rates. And the only component really to the stock markets anymore in the world is what's the Fed doing. Well, if they keep cutting and that long rate goes up, that changes the game. And that's something we want to watch very closely and kind of see what happens in here. Again, I think you do have to have some risk management in place in this market. That's something that we're very good at Max Out Savings Advisors. And some of the numbers I've seen, it seems like most big institutional investors are fully invested into the rate cut, because after all, the rate's being cut and the market always goes up. And sometimes that becomes an issue. It's something to watch. Now, what else do we have here? Oh, Netflix, Warner Brothers. What can I say here? David Ellison Larry Ellison's son owns Paramount. He wanted to buy Warner Brothers because they need to get more size in the streaming business, because Netflix is the big gorilla in the room. Netflix holds a little over 40% of all the streaming versus the other guys. Well, Netflix has gone in and purchased Warner Brothers. Now, this has upset a lot of actors, a lot of movie people in the business, because it's going to hurt them. They're going to control everything. The theater companies are like, look, we can't have Netflix controlling everything and then shutting us out. And also conservatives don't like Netflix at all. I mean, honestly, Netflix seems to be basically a the DEI of the movie business. I mean, every big series or movie's got to have a lesbian in and a transvestite and a complete DEI, makeup in it. And the conservatives are fed up with this stuff. And yet, so here comes Netflix controlling 40% of the market, wanting to buy up Warner Brothers to sit there and move their agenda forward. It's fascinating that people are against this. I mean, it's the actors, it's the theater companies, it's the conservatives. A lot of Elizabeth Warren is against this for antitrust. And this thing, it almost makes no sense. There's some numbers that the Justice Department uses for antitrust, and they have some formula. And Netflix has streaming; they're about 40%. So you add on Warner Brothers, it goes even higher. And the number. So if their number goes over 100. This isn't on the 40. Based on their calculations, you start looking at it. These numbers for Netflix are coming in at 600. Now, a couple thoughts. Why are they doing this? And I think this is a big story for a number of reasons. It's going to control whether DEI is out. This is a big thing for conservatives. These people have, Reed Hastings is a hardcore leftist, and he's got an agenda, but they want to control the market. And the antitrust, now after the Google, where the judge basically said, yeah, Google's a monopoly, but technology's changing all the time, so monopolies don't mean anything. And Netflix is kind of going, well, it's not streaming. You have to look at YouTube, and you have to look at TikTok, like TikTok videos are somehow now the alternative to watching a movie or a show. And what they're kind of aiming for is what they want to divide the country up into oligopolies and different things. So Facebook, Meta controls Facebook and Instagram. TikTok's owned by somebody else. Netflix is going to control the movie industry, which is a separate thing, and going to be the dominant player in that with the monopoly. And they're going to control what you see. This is going to be a big deal. And I think this is something we're becoming more and more concerned about. I think they can sit there and play a few games of Trump with Donald Trump, some of their people, and cajole him into somehow getting this done. And I think the Trump administration has got to get tough with corporate America. Now, likely they figure, hey, either we push it through, or at worst case it costs us, I don't know how many $1 billion we have to pay if we can't get the deal done, but we've delayed Larry Ellison's Paramount or someone else, the Comcast or someone else in the business, from getting HBO and the other stuff, so we shut them out of the market so they can't consolidate, and we continue to dominate the market. It's a huge power play by Netflix. I don't think this thing should be approved. I think you should call your congressman on it because the Netflix is very, very liberal and a concern. But it's a bigger concern of this pattern that we're seeing. There's a story in the Journal how a big executive was involved in the building of the UT basketball facility, and it was a rigged contract, and they were I think he was going to they wanted it that way so they could give the contract to Live Nation for the ticketing and stuff like that. They gave him a pardon. Well, look, ticketing is a problem in the United States. There's a small number of people that control all the arenas, so you pay $100 or more for the tickets, and then you have to pay a huge surcharge on top of it for something because they control all the arenas. And it's a monopoly situation where a small group of one company or one or two companies controls the whole market, and you pay. I mean, it's like StubHub. The prices you pay, for tickets to sell on StubHub are ridiculous. And you're like, wait a minute, I can go buy and sell things for nothing, virtually nothing on eBay, and then I come over here to StubHub and I get massacred buying or selling a ticket. And again, working people in the United States are struggling. And And they're going to have to do something with all these people. Basically, this is not free market capitalism. This is basically crony capitalism, monopolists, and unfair situations put in place, and the government has to go after them. President Trump can't allow everybody to think they can take over all their competitors, because two things happen. Prices go up, which makes the standard of living more expensive, and people lose their jobs. And why this is important, and look, we manage money. We manage retirement money. We buy individual stocks and bonds. We understand earnings at Max Out Savings Advisors. We want the earnings to go higher. But having said this, we manage long-term money for our clients. We're not trading. We might trade something once in a while, but we're not running these accounts to sit there at a quarterly trading basis. We have to supply people with the growth and asset protection over 20, 25 years or more. And so we have to look at what's in the best interest of our clients in the United States and the stability of the United States long term, so our money holds up. If we're in Venezuela and Maduro takes over or Chavez takes over, our stuff goes to hell, and our clients, unless we're very, very good, and we think we're actually pretty good, it makes our job a lot tougher to navigate through that. Most money managers don't even know what to do, but that doesn't do anybody any good. And so we have to sit there. The Republicans and conservatives have got to sit there and maintain the populist agenda and move forward. And if companies are taking advantage of people, they need to be called on the carpet on it. It can't be a free lunch just because somebody put in a factory, because and the reason why is it's not because I want to beat up on companies, because if this continues to happen, socialism will be elected into the United States of America, and it will all go downhill from there. And that's what is so. That's the thing. I mean, look what happened in New York, magnanimous. I mean, if there was one place in New York where some radical, anti-Semitic Muslim socialist could get in, I would say the last place would be New York City. And yet, actually the biggest concentration of Jewish people in the United States, and yet look what just happened. So if you don't think it can't happen there, it can't happen here, look what happened up there. And so it's going to be important for the administration to sit there and look at some of this stuff. I mean, again, the concert tickets are ridiculous. I mean, some of these things are so patently obvious or blatantly obvious that it needs, and everybody sees that, and then because it's important. Why capitalism works is, you have to understand, why capitalism works is not because everybody makes money when things are going well. That makes it work too. But also when things go badly, everybody loses money too. So when things go badly, go back to France with Marie Antoinette. I mean, people are starving in the country, and she's like, let them eat cake. I don't think that was the exact quote, but it was something. It was a different type of cake. But that was when things go badly, everybody goes down and everybody loses, so everyone loses across the board. And right now we seem to be coming into a situation kind of more of like a Marie Antoinette, where the top 1% is living very well. And they have to be. It has to be clear to the population that we're concerned and we're going to do something to make sure your standard of living comes up too. And that's the issue, because again, remember, you want your assets long term. Hey, it's great if you buy some stock and it goes up 50% next week and you sell it. That's really good. But money, long-term, wealth is built up over the long term. It's one good decision after another good decision, long-term things, long-term bets. That's how you build up big money, and it becomes difficult in a socialist environment. And that's the reason we sometimes talk about some of these issues, because we want to continue. We have the greatest system in the world, and we've kind of let people get too much influence in this country, which is endangering our country, and we can't let that happen. We have to have a level playing field across the way, and this Netflix thing stinks, and it should be shut down pretty quickly to kind of set example for everybody else out there. because if you look at working people, they're really concerned about inflation, and we don't see inflation going away real quickly. There's a lot of money printing going out there. The Fed's going to probably have to start. They're ending quantitative tightening. It's going to end this meeting where they've been kind of tightening up or buying bonds, and they're going to start selling, which is going to create more money in the market. To sit there and I didn't do that quite correctly. I'm going to correct that after the break. But the quantitative easing is going to put more money in the system, in a system right now where you have a very high stock market, you have a very high assets across the board, you have gold and silver screaming there's a problem. And this is something we want to watch real closely. So I'm not convinced this meeting next week at the Fed is just going to be a complete cakewalk. We'll be right back after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
I'm Ted Gioka, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues. And that's where Ted Gioka can come in, and he can help. Go to MaxOutSavings.com and schedule some time with Ted. That's MaxOutSavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 1033. The Answer.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to MaxOutSavings.com. That's MaxOutSavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings investments in your retirement. I want to just mention one of our sponsors, Rangoni Alto Gin. It's a fine botanical gin from the northern Italian Alps. It's put together with organic botanicals using some experience that some of these people developed over several thousand years, just to put together a phenomenal taste profile for the gin. It's in some of the finest restaurants in the world. It's called Rangoni Alto Gin. Give it a try if you get a chance. You can get it at Specs or Total Wine. Look for the kingfisher bird on the label. Rangoni Alto Gin. A couple things I want to just touch base on is if you look at a couple things we've got coming here. We're coming in on year end. We're working on our RMDs, and so we've been talking to people on that, sending those out, which is required minimum distributions. And those you have to take a required minimum distribution if you're over the age of 73 in your IRA, because the government would like to get their money back eventually. They don't want these things growing to the sky, so to speak, because they're growing tax-free. And it's interesting. And the other one you need it for too is if you have an inherited IRA, and so if you've inherited an IRA, you have to take out the RMD, and you got to take it out within 5 years. That requires some real tax planning. And so if you've inherited an IRA, talk to your financial advisor. You can give us a call because it is it's actually not. It's simple to take it out and calculate it, but it can really jack up your taxes, particularly if it's a larger account, because you got to get out of there pretty quickly. And so you do have to kind of come up with a plan to work on your taxes with that. And so that's really important. The RMDs, it's really interesting. There was actually a study. If you take out the RMD, typically there's a 4% rule, which actually William Benjamin came out, which actually he now says you can take out more than that. But the 4% rule was you can take out 4% or a little more than that each year. The RMDs, they did a study, and it works out at pretty close to the 4% rule. Initially, you're taking out less, like 3%, but then it starts going up, and it can get like 8-9% or more as you get into your 90s, and so it's recalculated every year. It's called RMDs, required minimum distribution. I think some of them call them MRDs or something, minimum required distribution, but that's what that is. That has to be done by the end of the year. Your first year, you can do it up until April of the next year. Another thing to look at is qualified with an RMD. Keep in mind, you have an RMD, you have to take it out. Well, if you don't need the money, you can do it, and you're giving charitable contributions. If you're over the age of 70 and a half, you can do what's known as a QCD, which is a qualified charitable distribution. So you can, for instance, if you want to give $5,000 to the church, or to your alma mater or wherever, you can you can have a $5,000 check issued in the church, say Second Baptist name, and the firm will send it out. We use Charles Schwab to hold our assets as our custodian. So Charles Schwab will send out a check payable to Second Baptist whatever fund, and when you get your 1099. It doesn't go on your gross income. It just gets pulled off the top. Now, if it went on your gross income, then you could deduct the $5,000. But since it didn't go on your gross income, it's the same thing, but it reduces your gross income, and that can be very valuable for different types of programs and stuff. It's called a QCD, Qualified Charitable Distribution. Again, you have to be over 70 and a half, and the maximum you can do is $100,000 on that. So that's something to take a look at. Also, we have harvesting tax losses. This is something, if you've got big capital gains, you want to take a look at tax losses. Keep in mind, you can write off $3,000 worth of tax losses at a time, which is that's the maximum. But if you have a gain, so if you have a $10,000 gain and you have a $13,000 loss, then you can generate with your taxes a $3,000 loss, and that's it after offsetting the capital gain. But if you have stocks that you have a loss in, now's the time to look at those. Now, keep in mind when it comes to harvesting losses, you can't buy back for 40 days. We actually have a situation in our accounts where we actually have something that went down. We bought more of it with the intention we're going to sell it out in 40 days, the high cost, because we need the capital losses, particularly for our regular accounts. Capital losses and capital gains, keep in mind, don't affect IRAs because you don't pay capital gains in an IRA. You only pay taxes when you take money out on that. So those are a few things, some end of the year planning things to deal with for your retirement. The other thing, of course, is to look at have you taken enough out of your 401k? Can you put a little extra into your 401k plan? How is your savings program? Look, now, excuse me, get some coffee here. Now's the time year-end is a great time to make some resolutions for the new year. And why it kind of works is it's kind of a turning point. And so it's a lot easier to make changes at year-end because, look, I got a plan for the new year rather than kind of stopping mid-course and saying you can make a change. And so if your savings rate isn't what you think it should be, now's the time to call your HR person and start the new savings rate for the new year. If things are tight and you're behind, kick it up 1 or 2%, something you can still manage through. But because time goes much quicker than you think it does, and so even by doing it, you look up one day and those 1 or 2% made a huge difference. And if you're behind, once you hit the age of 50, that's when you should get really serious for retirement. We find a lot of people aren't quite there yet. That's when you want to kind of, again, try to ramp up that savings, maybe save more than 10%. If you're age 60, for instance, and you're behind, look, you work till you're 65 or 67 or whatever, now's the time to ramp it up even more, say 15%. But it's year end. Everybody knows sort of where their retirement is. You might not have an exact number or anything, but you got a good idea. And if you think you're behind, now's the time to bump up those changes to take advantage. Remember, save aggressively and invest conservatively. That's the key to building up wealth over the long term. So, okay, welcome to the Max Out Savings Show.
Good morning, Ted.
Morning.
Yeah, I had just a quick question on the big, beautiful bill. Maybe you might confirm this or not, but I thought I saw somewhere where basically that thing, which is the bill is going to become effective January 1st of next year, that even people who claim standard deduction will be able to deduct up to $1,000 of their charitable contributions. Do you know if that's true?
I think it is. I think that, yeah. Going off the top of my head, I might even be this year, but for 2025. I do think they did, because what was happening is some people weren't making the smaller charitable deductions because they weren't itemized. The itemized numbers gotten so high where you just take the standard deduction, it's kind of hurting some people for like church and things like that.
So you think it applies to this year? I thought it was next year when this thing applied.
Yeah, I'm pretty sure it applies next year, possibly this year, but I'm not sure. I think that's a great idea, by the way.
Yeah. Okay. Well, in as much as you mentioned about that qualified distribution with the IRAs, I didn't know. I guess that would be better going that route than to taking a deduction. I guess you'd have to work.
Well, I tell you what, particularly it's actually it's a good deal for kind of more middle-class people that got big IRAs, because some of those things can kick you into higher brackets, and you could lose some things like Medicare and other things. So sometimes it's better. And look, with this new big, beautiful bill, there's a bunch of cutoffs on those type of things.
Right.
Everything from the tax on tips and all types of other stuff. And so it's actually a pretty valuable thing for older Americans at 70.5, but a lot of people don't take advantage of it, but they really should look at it. And it's pretty simple for us to do it.
Right. Okay, thanks a lot, Ted.
Okay, good. Thank you. Next question's on the QCD, Qualified Charitable Distribution, which you take out of your IRA account and for charitable donations. It doesn't go onto your gross income. And so when you do your tax time, your 1099 doesn't sit there and put it on the gross side, so you don't get like the $5,000 deduction, but your income doesn't go up $5,000 either. So it's kind of a wash, but it doesn't appear on your gross income. So it's a better way to go. Maximum is $100,000. A couple other things I wanted to just touch base on. Natural gas. We're talking about Again, a lot of talk about AI. We've looked. We're in a couple AI plays, really not much. I think robotics long term is going to be more exciting than AI. But the question is, how do you play? Look, with all the data centers going up, it's going to require a huge amount of electricity. As we talked about, one of the more shocking things out there is the fact that over the last 15 years or so, the United States has not grown their electricity virtually at all. Electricity production, where the Chinese have, the number's about four. It's not gigawatts, but it's terawatts, and China was about the same. Now China, we're at 4.3, and China is about 8.2 or something in that area. So you need electricity. So we think natural gas is a great way to play it. It's interesting. A lot of the companies that are making products and going into electricity or other things or things for AI, we're seeing lots of these companies, defense even, at 50, 60, 70, 80, 100 times earnings. And if we look at the natural gas stocks, many of them are trading anywhere from 8 to 11 times earnings, and they're going to grow their production some. And if the price doubles, you're going to get a real good earnings growth at a much more reasonable price. And that's one of the reasons we kind of like natural gas. It's really trading at the same place it was almost 30 years ago. And so I think eventually inflation is going to work into that sector. We continue to think inflation is going to continue to be a problem unless there's a severe financial type of correction. So those are some of the things we're looking at. When it comes to the markets, I still think you want to have somewhat of a hedge on. You don't want to have all your money into this market. We've been able to really achieve very good results, with cash on the sidelines, and when I think it has been a pretty defensive portfolio, and I think you want to continue to watch that in here. We still have a lot of big issues coming into the markets. A couple things. We're going to be sending out our Max Savings report. I've got it all written up. I've just got to get it proofed, and we'll get it out to you. If you're not on the list, it's a free list. We send out once a month, talking about savings, investments, RMDs, all types of stuff. We were writing about the great financial crisis in 2008 and 2007, and we said exactly what was going to happen. We just didn't say everything was going to collapse. We said there was going to be a failure of an investment bank, and no one was saying that at the time. And we get a lot of these types of things in the reports, and we put them in. We said the Russia war was going to lead to a big increase in inflation and gold prices. That's happened. It's all free in the Max Out Savings Report. And if you need help with your retirement, we manage retirement money at Max Out Savings Advisors here in Houston. If you need some help, just go to our website, maxoutsavings.com. You can request an appointment or get the number to call us for an appointment, or you can also request a free newsletter. And also remember our motto in philosophy, it's save aggressively and invest conservatively. And that website is maxoutsavings.com. I hope everyone has a great weekend. Thanks for listening to the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
AM 1070. The Answer.